Hello. Today we'll discuss smart money concept. It refers to biggest and the smartest players in the markets, which could be the banks, central banks, market makers, institutional investors, and they have overwhelming influence on financial markets. These people have access to large information, to a huge database, and they can use that to manipulate the market the way they want to. Many times you would have noticed that you take a position, you put a stop loss, your stop loss is hit, and then the market starts moving in your original direction. And it happens again and again and again and again. So this is what smart money does. They lead you into believing that you need to exit the position. They buy the stock from you at a lower price, trap you, and then start moving higher. So let's start with the most basic concepts of smart money. The first thing is market structure, which consists of higher highs, higher lows, lower highs, and lower lows. And this is what it looks like. Let's say the market is moving like this, and let's assume the market was coming from a downtrend. So this is a low, this is a high. Now this low is higher than the previous low, so this becomes a higher low. This high is higher than the previous high, so this becomes a higher high. This again is a higher low, and this becomes a higher high. Now assume that the market moves down like this. So now this low is still higher than this low. So this will be higher low. This high is lower than this high. So this becomes the lower high, and this low is now lower than this low. This becomes lower low, lower high, and lower low. So this is a swing structure. When the market is making higher highs, higher lows, higher highs, higher lows, it means the market is in an uptrend. And when the market is making lower high, lower low, lower high, lower low, it means the market is in a downtrend. Now there is an important concept that I want to discuss with you. Let's assume the market moved up, and it moved down, then it moved up. Now you might think that this is a low, but no, this will not be considered low until this high is taken. Now this is a low. Similarly, this high will not be considered high until this low is taken. Now let's move to the next concept, which is break of swing structure. The market moves like this. I'll just change the color over here. The market moves like this. Okay, this is a low, this is a high, lower low, lower low, and higher high. Now this low is strong, and this high is a weak high because it got taken over here. But this low was a very strong support. The market, the price direction could not break this. Again, this high is a weak high, this low is a strong low. Now for the market to move down, for the market to break this strong low, a lot of liquidity is required. When this happens, when this strong low is broken, this becomes a weak low, and here we say there is a change of character in the market. This is also called CHoCH. Similarly, if the market is in a downtrend, this is a strong high, strong high. This is a weak low because this got taken over here. This is also a weak low because this got taken over here. Now for the market to change direction, it has to take this strong high and then it becomes a weak high, and we say there is a change of character in the market, which changes the market direction. Now every market has two kind of structures. One is the swing structure and one is the internal structure, the fractal structure. Again, we'll consider the same figure. This was a high, this was a low. The market broke this high level, this one. So this is called break of swing structure. Some people call it just BOS, but just for the sake of clarity, I'm calling it break of swing structure as of now. We have another break of swing structure over here. One more over here. One over here, which is also the CHoCH, and one over here. Now let's assume that this movement happens in 4 or 5 days. Okay, but within those 4 or 5 days, there are days when the market can move in any direction. So it could be the market could move like so. And so on. So within a swing structure, there is an internal structure and there is a break of internal structure as well, as we can see over here. But if you're a beginner, I would suggest you go for a swing structure, because the break of internal structure is a slightly more complicated topic. We will take this in another video. So do subscribe to my channel and don't forget to push the notification icon. So you'll get a notification whenever I post a video about that. We have already discussed CHoCH, change of character, which is also called shift in market structure. I'll just explain this to you once again because we'll be using this throughout the video. Here we have a break of structure. Here we have a break of structure, and both these structures are bullish break of structure. But over here, this is a bearish break of structure. Okay, to take this strong support level, the strong low, a lot of liquidity is required, and this changes the market structure. It is also called shift in market structure. Now, one of the most important aspects of stock markets or forex markets or even cryptocurrency is liquidity. Liquidity is what drives the market. Okay, now I'm going to tell you about one scenario which almost every retail trader goes through. Consider this scenario. The market is moving up and it is following a trend line. Traders put their stop loss just below this trend line. Traders will think that the market will come here, respect the trend line, and then move up. Now, what is stop loss? Stop loss is liquidity. There is a lot of money, lot of liquidity waiting in each stop loss level. And what do market makers need to make the market move in their direction? Liquidity. Now what they will do is, they'll make your stop loss hit, absorb all this liquidity, and then continue in this direction. That's when the traders think, what happened? I maintained the stop loss, I respected the trend line, the market just hit my stop loss and started moving in the same direction. This is what smart money does. And there are many scenarios in which this can happen. I just showed you one example. I'll show you one more. Consider this example. There is a double bottom here. Okay. Now, what would you think? That this is a strong support level. Okay. The market comes back here. You are maintaining your stop loss, but the institutional players, they make your stop loss hit and then continue in the same direction. Same way we can consider this. This is the stop loss. Your stop loss is hit and then it continues in the same direction. So this is how smart money absorbs liquidity, and you don't want to be the liquidity. Okay, now let's consider a real world example. This is the Australian US dollar chart. This is the daily chart. We have a higher high over here, a lower low over here, a lower high over here, lower low over here, and another lower high over here. This is still in the making. This was the previous low, and here we have a break of structure. Okay, now this is our order block, this level. See how the market goes down, comes back to the order block, and then continues its direction downward. So whatever orders there were over here, the market makers had to come back here to fill up all those orders. Let's consider the same chart on 4 hours time frame now. Earlier we checked it on a daily time frame, and now this is 4-hour time frame. We have a lower low here, lower high, lower low, and then right here, somewhere here, we have a break of structure. Okay, and this is where we have order blocks. Now see how the market goes up, comes back to the order block, fills up all the order blocks, and then continues its journey upward. So this is how order blocks work. This is how the smart money concept works. I have tried to explain it to you in detail, and I know this has been a very long video, but I needed it to be a long video so that I can make you understand in a better way. If there is anything that you want me to clarify, please mention it in the comments. I will try my best to make yet another video explaining and clarifying all your doubts. Now I know that you might need to revisit this video time and again, because this is a fairly new concept for a lot of people that I know. So do bookmark this video. You might need this again and again until you become a pro at it. I have created a trading strategy on TradingView based on order blocks and smart money concepts and higher high, higher lows, fractals. All of this is combined into one strategy, and you will be amazed to learn about that strategy. But before that, you have to make sure that all your concepts about order blocks are clear. Now I'll wait for you to just absorb all this learning, and then I'll come up with yet another video explaining my strategy on how to use all of these concepts. I hope you enjoyed the video and learned something from this. I'll see you in the next video. This is Bharat Mudgal signing off.